Hello everyone, welcome back to my YouTube channel. Today let us understand interest on capital in partnership accounts. Clear? So let's begins with the meaning of interest on capital. Interest on capital, it means what? It means the amount given by the firm to partners for the capital invested by them in the business. Interest on capital means the amount given by the firm. Amount given by the firm to whom? To partners. For what? For the capital invested by them, means by partners in the business. It means partners invest money in the business as capital, right? For that invested amount, the firm gives interest to the partners. So interest on capital, that is an expense for the firm, because the interest that is given by whom? By the firm to the partners. But it is an income for the partners. Partners are receiving the amount. So it is an income for the partners. Clear? For example, see if a partner invests rupees 1 lakh and interest is allowed at 10% per annum. Partner invests 1 lakh and interest is allowed 10%, means allowed by the firm. So the partner will receive rupees 10,000 as interest on capital, means 1 lakh into 10%. 10,000 given by whom? By the firm. To whom? To the partners. For what? The capital invested by them in the business. And see here, normally no interest is allowed on partners' capital. Normally no interest is allowed on partners' capital unless it is mentioned in the partnership deed. But if it is mentioned in the partnership deed, we need to allow the partners' capital. Means interest on capital that is allowed to the partners only when it is mentioned in the partnership deed. Clear? If there is no agreement in the partnership deed, partners will not get interest on capital. According to Partnership Act, no interest on capital is allowed, but unless it is expressly agreed by the partners. Till here it is clear, right? Now, why is interest on capital given? So, what is the reason why the firm will give interest on capital to the partners? There are mainly two situations. So, first one, it is when partners contribute different amounts of capital. Partners contribute different amounts of capital but share profits equally. It means what? When partners contribute different amounts of capital, means, for example, A invests rupees 5 lakh and B invests rupees 2 lakh. It means partners contribute different amounts of capital but share of profits equally. But both share the profits equally. Means 1:1 ratio. Clear? So here, to maintain fairness among the partners, interest on capital is given. See, here A has invested more money, right, in the business compared to B. So, to compensate A for investing higher capital, the firm allows interest on capital. To compensate A for investing higher capital, the firm allows interest on capital. Clear? Because A invests more, means his expenses are more. So to compensate A for investing higher capital, the firm allows interest on capital. This becomes the income to A. And this helps in giving a fair return to the partners based on the amount invested by them. Clear? See, if the profit sharing ratio is different, then there is no problem, right? For example, 3:2, 3 to A and 2 to B, right? Means more profit is going to A. But here they share the profits equally, 1:1. And at the same time A invests more compared to B, right? Means it becomes loss to A. So to maintain fairness among the partners, interest on capital is given. Now let's see the second situation. So second situation, that is exactly the opposite of first situation. Here in the first situation, partners contribute different amounts of capital, but they share the profits equally. So what is the second situation? Second situation is when partners contribute equal. Here partners contribute equal amount of capital, but they share profits unequally. But share profits unequally. Clear? For example, A and B, they both invests rupees 3 lakh. A and B both invest rupees 3 lakh each. But profit sharing ratio how much is 3:1. 3:1 means 3 to A, 1 to B, but they are contribute equally. But here more profit sharing ratio is going to A, right? This is for A, this is to B, and less amount to B. Here both partners invested equal capital, that is 3 lakh, but A receives more share of profit, that is 3, right? So to give a fair return for the capital invested by both partners, interest on capital is provided equally based on their capital contribution. This helps in treating the partners fairly for the amount invested in business. Clear? So I hope this situation is also clear to you all. Now interest, on which amount we need to calculate the interest? Interest, it is calculated on opening capital, additional capital introduced during the year, and after considering withdrawal of capital. Means on the opening capital, any additional capital, any withdrawal of capital. On these amounts we need to calculate the interest. And what is the formula? Capital rate, capital into rate into time. This is the formula. Clear? Now see, there are three situations. First one, interest on opening capital. Just now I said, right, here we need to calculate the interest on the opening capital for the whole year, means for 12 months we need to calculate. And interest on additional capital, here if a partner introduces additional capital during the year, interest is calculated only from the date of introduction till the end of financial year. Means for example, the additional capital introduced by one of the partner on October 1st. Clear? On October 1st. Now we need to calculate the interest from October to year end. So our year end is March, means October, November, December, January, February, March. For 6 months. For 6 months we need to calculate. So interest on opening capital whole year, 12 months, and interest on additional capital from which month they have introduced the capital, from there to year end we need to calculate the interest on additional capital. And interest when capital is withdrawn. If a partner withdraws capital during the year, here the amount remained in the business, till that we need to calculate the interest. For example, on October 1st, one of the partner withdraws the capital. Clear? Now withdraws the capital on October 1st. So how we need to calculate the interest? So the amount that is remained in the business till October 1st. Means our year start from April. So April to September it is remain in the business, but on October 1st it is withdrawn. So from April, May, June, July, August, September. So only 6 months that amount remain in the business. Till that we need to calculate the interest. Clear? So these are the situation. Now I will explain this one through example. See here. See, for example, A's opening capital rupees 2 lakh and interest rate is 10% per annum. Clear? Now here we need to calculate the interest for the whole year. And additional capital introduced rupees 1 lakh on July 1st. Here we need to calculate the interest from July to year end, March till March. And withdrawal of capital rupees 50,000, that is withdrawn on October 1st, means the amount remain in the business till September. But on October 1st they withdraw. So from April to September, till that we need to calculate the interest. Clear? So first one, interest on opening capital for whole year, that is full 12 months, means 2 lakh into 10% equals to 20,000. Now interest on additional capital, how much? 1 lakh on July 1st. From July to year end, calculate. July, August, September, October, November, December, January, February, March, means 9 months, right? So 1 lakh into 10% into time, 9 divided by 12, that is equals to rupees 7,500. This is the interest on additional capital. Now effect of withdrawal of capital. See, withdrawal of capital rupees 50,000 on October 1st. Here don't get confused. Clear? Calculate the interest very carefully. So this amount remained in the business only for 6 months, means October 1st. So April, May, June, July, August, September. Only 6 months. The amount remained in the business only for 6 months. So calculate the interest only for 6 months. 50,000 into 10% into time. 6 divided by 12, that is equals to rupees 2,500. Clear? This is the, in this way we need to calculate the interest. Now final interest. Final interest, how we need to calculate? Now see, on opening capital the interest is 20,000, write down. On additional capital introduced, that the interest is rupees 7,500. But here we calculated interest on withdrawal of capital. So here this amount, that is rupees 2,500, we need to deduct in case of withdrawal of amount or withdrawal of capital, that is rupees 2,500. Clear? Here we have calculated. So total final interest on capital, how much? 20,000 plus 7,500 minus 2,500 equals to 25,000. Clear? So final interest on capital allowed is rupees 25,000. In this way we need to calculate the interest on capital. Clear? So I hope the calculation of interest on capital is clear to you all. First one for opening capital, that is for whole year, and additional capital. So the additional capital, how we need to calculate? Calculated only from the date of introduction till the end of financial year. And withdrawal of capital, that is we need to calculate the amount remained in the business. Clear? So I hope this topic is clear to you all. So in the next class we will solve more practical problems on interest on capital. If you have any doubts in this class, please leave a comment. Thank you.